Good morning, everyone, and a very, very warm welcome to this webinar in relation to establishment in Sweden from a tax, legal, and sustainable perspective. This has been arranged in connection with the Finnish-Swedish Chamber of Commerce. We're very delighted to be here. We are participating from Greenstep today, so there are 4 of us. It is myself, Caroline Solvin, working as a tax consultant and a legal consultant. We also have Åsa Spets with us, a senior VAT specialist, and also Karin Holmqvist, a senior sustainability consultant, and Otto Simons also, who will dig into data analytics later on. So a very warm welcome to you all. A little shortly about Greenstep. Greenstep is a company of some 800 plus experts. We are located basically throughout the Nordics. We have offices in Finland. Of course, it's a family-owned company, and some 500 plus consultants in Finland in various offices. We also have 4 offices in Sweden at the time being, and we're also located in Norway, Estonia, the UK, and recently the Netherlands. Our aim is always to put the client in focus. We aim at consulting them with our various services throughout their journey. You can see them on the right-hand side over here. So again, a warm welcome to you all. This is briefly today's agenda. So myself and Åsa, we will discuss establishment in Sweden for some give and take 30 minutes. Thereafter, we will discuss sustainability and CSRD with Karin for another 30 minutes. And thereafter, Otto Simons will also discuss data analytics. There is also a Q&A in the end of the session. We have also, thank you very much for that, received some questions even per now. So we aim at having the Q&A in the end of the session for technical reasons. So feel free to put any questions in the chat and we'll be happy to try to answer them in the end of the session. So let's kick off. In relation to establishment in Sweden, there are 3 different ways of doing this, basically. So there's a limited company, you have a branch, and you can also do a registration as a foreign entrepreneur. And we will also discuss some tax implications in cross-border setups. And I'm sure that you all have some questions that you can raise in the chat also in relation to that. Let's start with the first one, a limited company. This is the most straightforward way of establishing in Sweden. There is a minimum share capital of 25,000 Swedish SEK. You need to have a board, naturally. Very often, the Swedish board is the same as in the foreign company. Let's say this is a Finnish company during today's webinar. So usually the board is the same, and sometimes it is not. These 3 mentioned different solutions are the most common one. You can add 1 board member and 1 alternate. Usually the board member will then sign as signatory. You could have 2 members and 1 alternate, or 3 board members and no alternate. What is important to bear in mind here is, which is very, very common actually, if there is only foreign members of the board and not a Swedish citizen with a Swedish social security number, there is a mandatory obligation to have a special appointed recipient of mail, in Swedish särskild delgivningsmottagare in Sweden. So this is mandatory, so that is good to bear in mind. Depending on the person being in the Swedish company, it could be such a person if this is an employee in Sweden, but this is of course up to the company to decide. Must also mention that in relation to the bank account, this could be a struggle at some times, as the banks are not too keen on collaborating here. The very best and most straightforward way to go about this is to reach out to the Finnish bank and have the Finnish bank reach out to a Swedish bank. That is usually the best way. And the banks nowadays, they don't very much work with having meetings physically in the offices. So this is the reason for that. A limited company needs a tax registration. So you need to investigate whether there is a need to register for value-added tax, for payroll tax, and for corporate income tax. Payroll tax registration will lead to monthly reporting, usually mandatory social contribution payments as well, which are made to the Swedish tax agency. You might also need to look into labor and HR issues, as you need to make sure that the employment contracts are compliant with Swedish labor law. So this is very common to miss. Handling times for these applications varies. It depends on the handling time within the Swedish tax agency, but usually 4 to 8 weeks, I would say. In terms of the VAT, Åsa will let you know a little more shortly, but usually monthly, quarterly payments there. And the same is for the corporate income tax. These payments are basically, they are based on an estimation of a surplus that you enter when you make the application for taxes. There is also an accounting mandatory reporting. So the accounting needs to be compliant with Swedish accounting rules. You might also need to look into whether there is a need for an auditor. Very, very usually, I would say that the first 2 years you are spared in having an auditor. But this is, of course, also depending on the company and the corporate structure as such.
So when we looked into different VAT aspects that are to be considered, I would say the limited company is the most straightforward, since it usually is understood that the business activities, either they are VAT liable or not, depending on the branch you are active within. And the general rule with regard to VAT is that unless it is explicitly stated that something is exempt from VAT liability, everything is VAT liable. So that is the general rule. So what's especially important if you are setting up a company in a limited company in Sweden is that you investigate whether there are any specific VAT rules that actually deviate from your local rules in the home country. We have a common EU VAT directive, but still the EU member states can have specific rules that might deviate from other countries. So that is very important to look into. For example, it could be construction business. There are special VAT setups or rental of immovable property in many countries. Those kind of activities are exempt from VAT liability, but you can enter into a voluntary VAT liability. Trade with scrap could be something. This is just some examples for where we have different VAT rules with regard to the reporting. And usually also if you have special VAT rules, these do in general often affect the deduction right on input VAT. So it's very good to check that you know about the Swedish rules in order to make sure that you are or your company is compliant with the Swedish VAT Act.
So that leads us to the branch. Moving on. Why should you register a branch? So basically, there are some basic requirements in Swedish tax law stating that if the business is professional, it is conducted with an intention of a profit and provided on a regularly basis. That is something that means that you should look into registering a branch. Also, this is somewhat connected to a permanent establishment in Sweden. So these two investigations, let's call them that, are made simultaneously. So if you fulfill any of these requirements, please consider that it might be needed that you register a branch. Also, if there are many employees in Sweden, myself and Åsa work very much with these types of questions where there are projects in Sweden where a great number of employees are transferred to Sweden on various projects. This is also a case where you need to be really, really attentive because there might be a need to register a branch even in those cases. There are some exemptions also. You can see them on the right-hand side here. Transports to and from Sweden, persons and items. I'm sure that Åsa will also let you know a little more on the VAT side there. Advertising, and exhibition of goods, take orders for goods, artistic activity. Construction contracts are a little connected to what I previously mentioned when you have personnel in Sweden. There is a basic rule here according to many double tax treaties with up to 12 months. So you can actually have a project in Sweden to some extent with up to 12 months, but this depends on the country of the foreign company and the double tax treaty in question. So this is the DTT that is mentioned there. I think we're okay with that. Åsa, would you like to? No, this is mine also. So in relation to the branch, there is a need to make a legal registration in towards the company registrations office, that is Bolagsverket. We basically face the same requirements as for a limited company, a tax registration for value-added tax, payroll, and corporate income tax. The same applies with payroll. We have the monthly reporting if we have employees. Usually there are employees in a branch and a limited company. It is very unusual that the company sort of conducts the business itself. So it's very often connected to having some sort of employee. We have the mandatory social contribution payments as well, and labor laches, as previously mentioned. There might be some implication in terms of invoicing from a branch. Åsa will let you know a little more there. Also very important, keep a separate balance sheet where incomes and expenses are allocated to the Swedish branch. This is the most common error, I would say. It is important. If you have a system that supports this, this is very much to recommend, as this is required when you also file an annual report to some extent and the corporate income tax return. Handling time is also 4 to 8 weeks. So this is depending on there. Sometimes they work with us and can be even quicker, but usually around there.
So when we look at the VAT aspects with regard to branches in Sweden, it is basically when we have established Swedish branches treated in the same way as limited companies. So they are equal from a VAT purpose to one another, which also means that there are no simplification rules that can be applied compared to a VAT registration for foreign entrepreneurs, which we will go through a little bit later. And as Caroline mentioned, headquarters can in general not invoice the branch since it's one and the same legal entity. But there are exemptions where you, from a VAT purpose, need to issue an invoice. For example, then when it comes to cross-border transfer or movement of goods that are still your own goods. So, for example, from the headquarters to the Swedish branch, then you would need to issue a pro forma invoice. And this is due to the fact that we do not have any customs within the EU anymore, but we still need to follow the movement of goods for several purposes, for example, trade statistics and so on. So when it comes to cross-border transfer movement of goods, you need to consider that pro forma invoices need to be issued from the, in this case, Finnish VAT number to the Swedish VAT number of the branch. And as Caroline also mentioned, with regard to from a VAT perspective, with regard to supplied services between headquarters and branch, no invoice is to be issued. This is usually handled through the allocation of costs and revenues.
So moving on to a registration as a foreign entrepreneur. There is no needed registration by the company in this sense, and by this I refer to the legal requirement. So this is company registrations office. However, there is of course a need for a tax registration for payroll only. So there is, to some extent, this is always a case-to-case basis. We need to determine and make sure that there is no permanent establishment in Sweden. Because if there is a permanent establishment in Sweden, it is the previous two mentioned, the branch and the limited company, that are at stake. If there, for example, the most common scenario is that there is a salesperson in Sweden. Let's say a Finnish company hires a salesperson in Sweden to see whether there is a market here for the business that is conducted. If that person does not hold the right to sign on behalf of the Finnish company, let's say that this person is working remotely from home, and well, the business is very much of a preparatory art. In those cases, you can actually go about and file this type of registration, which means that the Finnish company is more or less only registered as a foreign employer in Sweden. However, it is very important to be transparent towards the Swedish tax agency. If they come to a different conclusion, as there is otherwise risk of penalties or charges, of course, you will face monthly payroll reporting. The same if it's a Swedish-based person, I would say most likely also social contributions in Sweden, and also no accounting for this. So no bookkeeping, no accounting, no annual reports, simply reporting of payroll returns and payments towards the Swedish tax agency.
And basically the same applies if you intend to conduct a VAT liable business in Sweden without being established in Sweden, you will need a VAT registration, and this is then usually a registration as a foreign entrepreneur. Again, it's important to investigate whether there are general deviations with regard to the Swedish VAT rules and the VAT rules in the home country. There might be that specific VAT areas have specific VAT rules. We mentioned those before, for example, construction services. And obviously also then if there are specific VAT rules, also the deduction right on input VAT might be affected. The interesting part about a sole VAT registration as a foreign entrepreneur is that local simplification rules might be applicable. For example, in Sweden, we can, as a foreign entrepreneur, register for VAT purposes in Sweden, and your Swedish customer or your customer is registered for VAT purposes in Sweden. So it can also be a foreign company registered for VAT purposes as a customer. You can apply local reverse charge on those sales of goods, for example. This is not possible if you have an established branch or a Swedish limited company. So these rules can be quite interesting, the simplification rules. And the reporting as such is usually done on a monthly or quarterly basis in Sweden, the VAT reporting. If you have a turnover over 40 million Swedish crowns, you will need to report your VAT on a monthly basis. Otherwise, you can choose to be reporting on a quarterly basis.
So let's look into some common tax implications, if we may call them that, and from a legal side also. Usually we need to look into where the parent company is located. If it is in Finland, we need to check Finnish tax legislation versus Swedish tax legislation. So this is something that needs to be considered, of course. We very often receive questions on whether there is a tax difference between setting up a limited company compared to a branch. I think both myself and Åsa, we're always recommending the limited company, as the whole structure in the Swedish tax system is more or less based on having a limited company. It is possible to have the branch as well, but there are some obstacles that we call them that might arise in having a branch. The upside with a branch is that there is no money, no share equity needed. So from that sense, it's somewhat easier. On the legal side, when you register the branch, on the other side, you need an even larger, I would say, documentation. You need some documentations stamped by the notary public, for example. This is also something that needs to be taken into consideration. And as I already mentioned, the permanent establishment that will arise both in the limited company situation as in the branch situation. So a branch is always per se a permanent establishment with reporting obligations of corporate income tax and turnover in Sweden. I would say it's this situation that we mentioned with a foreign entrepreneur, where you just register as an employer. That is to some extent a tricky part, and we have a lot of assessments within that field. So I think that was it for us. So moving on to you, Karin, sustainability and CSRD.
Thank you, Caroline and Åsa, for that initial presentation. So hello everyone, I'm Karin Holmqvist, and I work with sustainability services at Greenstep. And this is sustainability is of course of interest when you look into your business and in different countries. So let's have a look at the CSRD implications and differences. So next, please. I will cover a little bit of the regulation overview and also when to report according to this CSRD and what is new with it and how it's implemented in Finland and Sweden. And Q&A we said we would save until the end of after Otto. So hold on to your questions for a while. So why CSRD? Why the Corporate Sustainability Reporting Directive from the EU? Well, we have had voluntary reporting for many, many years with the big listed companies. It's been almost a mandatory, but voluntary guidelines. And it has been Apple and peers reporting according to investors. So they have not been too happy with the guideline and the voluntary. So in the EU, it was decided to now regulate. Next. To understand the foundation of sustainability, according to investors, many years ago, 15 years ago, ESG was something they created from the investor community. They wanted to make the non-financial reporting, the E, environment, S for social sustainability, and the G for the governance, measurable, tangible, concrete, and they wanted to compare companies to know where to invest. So as I worked a long time with sustainability many years ago, it was confusing to many stakeholders and people. Why do they use ESG instead of sustainability? That created a lot. And we could also talk about corporate responsibility, corporate social responsibility to confuse even more. But now we have ESG, and it's also what we will refer to here going forward. And if you do a good reporting in a group on the 3 parameters, you will be seen as a sustainable company and of interest to an investor, for example. Next. EU took the active role here in sustainability to drive sustainable finance, to help investors invest in green companies, to make companies comparable from the non-financial reporting. So sustainability is more regulated than ever before here in the EU. And the idea is that this is an agenda for growth, socially fair, with green development, and EU is counting on a spillover effect to other regions in the world, to Asia and the US and Americas. And it's going on for sure. But it's also about carbon neutrality by 2050. And also then there is something called Fit for 55, which is then based on the climate impact in 1990. EU want to have a reduction of 55% by 2030. So halving a little bit more of the carbon emissions by 2030. Finland has set a target of being carbon neutral by 2035 and Sweden a bit later by 2045. Why? Well, it's up to the countries to decide as long as they are within the boundaries, let's say, of the EU 2050 rule. You can also notice that this is then something you can hear from China and that they are thinking of 2060. So countries outside EU are also setting these type of targets. And you know, we have a big conference going on now about this in Azerbaijan. So let's see how this develops. But we are in the EU, we have directives, and that is then turned into national laws where we have to comply. So investors are supposed then within a few years to have comparable, sustainable performance result and data from companies in the EU. So far we've had 15,000 companies reporting ESG in the EU, and we count to have 50,000 companies with this CSRD when it's fully implemented. Next. The main directives for sustainability reporting. To the left, you will see SFDR. It's a Sustainable Finance Disclosure Regulation, so it's for the investors. And it's been going on for a few years, and they are transparent of their sustainability activities in financial markets and how they prevent greenwashing. They really have to do what they say they do. And you can see that in their yearly reports or so. The article funds 6, 8, 9 means that the 6, it's they invest in any company without knowing anything about the company's ESG or sustainability result. The 8, then they know that this company that I invest in this article 8 fund, they have some ambitions on sustainability, not so tangible and concrete and not in line with the carbon neutrality. So it's light green, as we say, in my world. But if you go to Article 9 fund, that is the green funds. So we would like to see more capital invested in Article 9 funds going forward, where companies have set their agenda on ESG and sustainability, and they are reporting the results, and the investors can then invest clearly in those funds. Going to the next one, taxonomy. It's a regulation from a couple of years ago for the bigger companies listed, more than 500 employees, a classification system, and it's establishing criteria for environmentally sustainable economic activities. And that is really tricky. I have my own experience from a big group, and to look at what you sell and put in the market and the related CO2 impact initially, and to show a journey going forward that you will reduce in line with this regulation. So it will be more clear to investors that this company is really having an ambition to reduce climate, but also to be chemically doing the right things and other environmental goals. It's 6 environmental goals. And it's also then minimum social safeguards, and it's ethical criteria. So it's a language of its own in this directive, in the taxonomy, really tricky. So if you have any bigger group of 500 employees and listed, they have worked with this for a few years. And I would say that it has not yet been very successful in regards of investors understanding how to use that directive. But hopefully that will develop over the years and be of value to them. It's a good thinking of economic transaction being sustainable. So that is how it's thought, and hopefully it will give result later. Coming then to the CSRD, which was then initially decided the end of 2023. and from the EU directive decided to be implemented of financial year 2024. It's about reporting requirements to bring the level of sustainability reporting in line with financial reporting. So finance, non-finance being equally important. And they also have developed the standards how to report called ESRS, European Sustainability Reporting Standards. We will have a look at those later. And we have some limits which companies are then within the CSRD boundaries, coming to that also. And finally, the CSDDD, Triple D, Corporate Sustainability Due Diligence Directive. It's for even bigger companies. I don't know the boundaries by heart, but it's more than 1,000 employees and 1 billion. I mean, it's a really big groups, and it's delayed to be implemented in a couple of years, so it's not yet applicable. But it's really about due diligence duty for companies to identify, prevent, and or mitigate negative impacts of their operations on people and environment. So human rights due diligence, environmental due diligence, those type of activities will, for bigger companies, be mandatory in the future. And one final comment on this slide is that taxonomy and CSDDD are to some extent part of the CSRD. So if you are in the CSRD, mandatory to report on that, you will do taxonomy, and you will have some due diligence also required for human rights and environment. Next. So when to report? Well, this one is a schedule for Finland, because Finland is following the EU regulation. And as you see, the standards were published July 2023, and companies that were reporting according to the non-financial reporting directive, 500 employees listed, bigger companies, they should then look at their financial year 2024 and report on CSRD beginning of 2025. So many Finnish companies have worked with that this year to be compliant for CSRD in this annual report for 2024. You can also see that other listed companies, other significant public interest entities, banks, insurance companies also begin reporting for financial year 2024. So in 2025, beginning of next year, we will see reports according to CSRD and NFRD, and you will also send then, so that's going to be interesting to see how many companies have understood the new regulation. And when it comes to what next, the green box, it says also other large companies starting reporting for financial year 2025. So if they have a revenue of 50 million euro, 25 million euro in balance sheet total, or over 250 employees, and two of those three criteria are met, they are then obliged to report on CSRD for financial year 2025, which means that those reports will come in the beginning of 2026. One small comment is that it should be 2 years consecutive of the financial numbers here and employees. So you should have 2 years in a row of those criteria. And so in 2026, you will see reports from the bigger, but also these other large companies reporting on CSRD. And then also here you can see listed small and medium-sized enterprises, as well as small credit institutions and insurance companies. So this is like a stair going from large to medium to small enterprises. And this is that is why we will have more companies reporting on CSRD going forward. And I think I will move to next slide to just show you the difference of Finland and Sweden, because Sweden decided to deviate from EU law. That is not recommended, of course. You will be fined as a country unless you follow the law of EU rätt, EU law. And here we said in Sweden, let's wait a bit because this is so big and complicated. Let's start later. So the bigger companies listed and in NFRD listed for 500 employees, we delayed the start to be from financial year starting July 1st, 2024. Not so many companies have that actually, but that means that most of the bigger companies will report from financial year 2025. So in Sweden, we will have a delay of the first year. However, what Sweden did already in the law this year is to have the limits of other large companies. And you can see the boundaries in the green box here. It's 550 million SEK of revenue, 280 million SEK in balance sheet or asset total, and over 250 employees. So lowering the threshold already 2024, similar to the Finland for 2025. So we will be aligned as of 2025 in line with the EU law. So that is actually the big difference. And if you're a company in both countries, the mother parent company will then set when to do this, as it is a group reporting. I think we can take next. Just to understand what is new. You can see here that, and I think I said it a few times already, that non-financial reporting or sustainability reporting or ESG reporting should be the similar weight as financial reporting eventually. So a sustainability report as a separate section has to be in the annual report, board of directors report, a separate section, which means it will be in the big annual report of bigger companies in the beginning. It's also group reporting, which means that if you're now having a subsidiary, you're a Finnish company having subsidiaries around the world or in Sweden, you of course include all entities in this annual report, same as finance. You need to look at your value chain, not how does it look from money. It's about actors, your suppliers, sub-suppliers, your contractors, your employees, your owners, and customers and consumers, end users. So you do that type of analysis and also look into their sustainability impact. So no longer only caring about your own company, you need to know and mind the value chain, which is upstream, we say, with the suppliers, and downstream, what happens when you have sold your products. That mapping needs to be done and documented and shown to the auditor later on. You must do the stakeholder engagement. You have a mapping done there. Who are the main stakeholders, the key stakeholders even, and then you ask for their input through surveys or interviews, and you have that process done and well documented, and then you show we have now listened to our stakeholders' views, and we include it in our double materiality analysis and the strategy if it is important going forward. So listen to your main stakeholders and be in dialogue with them, and that also has to be well documented, and you must show to any auditor what you have done in that process. Double materiality analysis is new. We have had materiality analysis earlier, where you as a company said we impact environment so many people, planet like or society like this. Now the double materiality is about the financial external views on that. I have some slides on that too. Quite tricky, but both value chain analysis and the stakeholder engagement feed the DMA, the double materiality analysis, with input on sustainability impact. After you have done your double materiality analysis, there is something called the standards, the reporting standards from the EU, where you do, they have been developed, they are new, and you do that type of gap analysis on what you have and what you don't have according to your DMA. And the auditor, that's also new, limited assurance. It was voluntary before, and now if you're obliged to do the CSRD reporting. It's mandatory, of course. It's in the annual report as a section, so there will be a limited assurance from an auditor who is specially trained for this, which has been going on this fall. And finally, digital reporting, electronic tagging, so everyone can see what has been reported and how. So that is also new. It's been done for finance and now also then for non-finance. Quite many new things to consider. Next. And this is just an overview also of the similar steps that you need to take to do your sustainability report. The DMA is something that many now mention, oh, we want or we must do the DMA. But as I mentioned earlier, you need to do the other activities too of the value chain analysis and the stakeholder engagement. Then you look into the technical standards called ESRS for sustainability reporting. So based on your DMA, it will define what topics are material, but in the gap analysis towards ESRS, it really gives you what you might have and not have, and what you need to do going forward to have a fully sustainability reporting according to the CSRD. It will be much text, not only numbers. It's expected to have 70% text disclosures, information of where you are, what you have done, and the result. Numbers is 30% or so. Could be good to know. Next. Well, I don't know if this is too deep, but I thought since I'm talking about double materiality analysis and give an example, so it is maybe more easy to understand, but a topic is material and must be considered if it's both having a financial materiality or an impact materiality. And if you look at the topic, the picture to the right, you have the company there looking at its own operational activities, its value chain, and you know that you have your impact materiality towards the environment. It could be that you have a climate impact, so it's an inside-out perspective. And going to the lower arrow, it's about, okay, so if this would be very serious, what would be the financial impact? And you then value the scope and the impact on your economic value creation. So it's not only how you impact the environment and people and society, but it's also the financial impact. And this is quite interesting exercise when you do this. Next. And yeah, maybe we should not spend too much time, but it was more to give. You can look at this later also, because if you're in a bigger group and you need to do this, it's about actual impact, potential impact. Is it positive? Is it negative? Because you might find opportunities when you do this analysis. And you could also then invest in, we will do this activity to grow our business because it will have a very competitive edge towards environment. So that is maybe also part of this exercise. And it's about short term, the 1 year operational perspective. Medium term is then 2 to 5 years, and long term more than 5 years. Which means that if you then look at some risks, you might say, okay, if that would happen now, it's a big topic, but in 2 to 5 years perspective, we know we will reduce that over time. So that type of analysis is then done in a very structured, well-documented way for auditors to also look at how you reasoned. Next. And the financial materiality is similar here. You can decide when you do this financial materiality what would be the best way to measure. Is it about our costs? If this risk or opportunity would realize, what would be the cost? But I also know that other companies are looking at margin. So the directive or the reporting standard says that you can decide what way you will measure your financial impact by doing when you do this materiality analysis. And this means that you will have finance people involved very much in this work. Not only do you, maybe I should take that too also, that this is really cross-functional work when you do your sustainability reporting, and the finance person is really crucial to get the best results and quality. Yeah, next. Just to have seen the standards, the reporting standards, the cross-cutting standards, they are to the left, ESRS 1 and 2. Those are the mandatory. The one is more of just a diagram, how to reason and think, while the 2, general disclosure, is quite comprehensive, a lot of information about the company, how you have worked and what you do, not only in general, but also about ESG topics. So that is the mandatory, but it's quite a lot of effort that need to be put there. Then the other ones, environment, social governance standards, they are called thematic, and they are only required to be reported on if they are material, according to your double materiality analysis. But maybe a comment here that ESRS E1, climate change, it's almost mandatory, because most companies cannot say that the climate is not important. It's really the major topic at this point of time. So E1, climate change and energy, is even for a small service company mandatory. Mandatory with hyphen. And then you see the governance side, it's only one standard, but there are subtopics, so maybe some topics in the standard are material. So it doesn't, just because some standards are material doesn't mean that the full standard has to be reported, and that details are, you will find later when you look into that. Next. So EU CSRD, the directive, it's a European directive, and its mandates eligible companies to issue annual sustainability reports. And it's implemented in national legislation, in Finland by accounting law, and in Sweden by annual report law, årsredovisningslagen. ESRS, the reporting standards, are used both in Finland and Sweden, and it's providing a framework and methodology for sustainability reporting. It specifies the information and ESG metrics required for compliance with the CSRD. And I have a link to the Swedish law here in case you're interested. Next. What if we cannot fulfill all the disclosure in the first reporting year? There are some understanding. You have time to fully comply with this law, but you need to disclose, explain where you are and why. So that is something that you will do over 3 years. Unless you are very successful and can do it in 1 year. So there is an understanding that it might take time to get this fully in place and implemented. Next. And this is a voluntary suggested reporting for smaller and medium-sized companies. And it's put as a suggestion to the EU. And we hope that they will take a decision in the beginning of next year about it, because this is then the same standards that I showed you earlier, but limited. So if you're a smaller, medium-sized companies, this is a way forward. So it's not going to kill your operations because of reporting. So it's really giving you basic and some main things, what to report. And again, we'll come back on this topic because it's going to help the small, medium-sized companies. But if you're in the group, as I said earlier, that's a different story. It's more if you're standalone. Next. You notice this is, I think it's my last slide. You could see some small differences then in the timing of implementing the CSRD between Finland and Sweden. And as of financial year, calendar year 2025, those differences will no longer be differences. We are aligned as of next year. However, reporting, transparency, comparability are going to change and be better. We hope to have Apple and Apple in the future reporting. And then the standardized sustainability reporting requirements will be an opportunity to inform wider audience about sustainability performance. And investors will have the information, but also employees and future employees. Talent are attracted by this. And I also believe, which is my view, that this will help companies understand their opportunities in the sustainability area, that you can grow your company operations with this. So the 3-step rule: do your DMA, do your gap analysis and the project plan. What activities, what targets, what will you do to succeed with your ESG work? Thank you so much for now. Otto, over to you.
Thank you, Karin. So hello, everyone. My name is Otto Simons, and I'm here today to talk about BI solutions, both cross-country and cross-system. So I work in our data team, and I have some background in information management and business intelligence. And I actually started my career in Greenstep as a data analyst in Finland, and has since moved to Stockholm to both grow our analytics in Sweden and Norway and grow our customer base there. And as an expat from Finland to Sweden, I went through the same things regarding my personal finances as many of our customers go through when it comes to their company finances and figures when opening a branch or subsidiary abroad. And that's the reporting and tracking of your financial figures, or the problem when it comes to how to combine figures from two different systems. So in my case, it's the banks I have in Finland and Sweden, but in our customers' cases, it's the accounting software. So you might have one software in Finland and another one in Sweden. And how are you able to track your figures and do your reporting based on these figures that you now have in two different systems? And unfortunately, I haven't found a proper solution for my own finances yet, but luckily there are several solutions for your issue, and that is a BI tool which help you automate your reporting and basically streamline your cross-country or system reporting. And today I'm here to talk about how we at Greenstep help our customers and what you also can do to get rid of these manual processes that will most likely come up when you open a subsidiary or branch in another country. So we can jump to the next slide. So basically, you can see here some pictures of our BI book, so our BI tool, and on how you can show your finances and combine them from the two different systems. I don't know, maybe for some of you, BI book is already something you're a bit familiar with, but maybe most of you haven't heard of it before. So I thought I'll jump into the platform itself and show you a bit more how it works. So let's see if I can share my screen. So, so what BI book actually is and how it works. So BI book is basically our BI platform that we built on top of Microsoft's BI tool Power BI. So Power BI is the leading BI tool on the market and most widely used. So we decided to basically not come up with our own BI solution, but rather build on top of that. And that's how we created BI book. So our BI platform, which helps customers more easily get in touch with BI tools and get started more quicker and easily. So basically, you can see here that we've pre-built a lot of different integrations to different systems. So most of our integrations you can find already here. Here's a lot of different accounting software from both Sweden and Finland. You can see Fortnox or NetVisor or Vismanet, Visma Business, NetSuite. So all kinds of integrations were built. So we basically automated the first step of having to build the integration so you can get the data out of the system. So we already automated that. So with the click of a button and pressing in your or putting in your credits, you can already open up the integration and we'll have the data there already loading. And on top of just building the integrations, we've also created these one-click models, so to say, or frameworks on top of these integrations. So this data is then populated into a report where you can track your finances. And the big benefit here when thinking about opening up a business in another country is combining the different systems. So we can have a look at an example of this. So here we, for example, have a report with two different companies. So in this case, it's one Finnish company and Oy, and a British company, so Ltd. And we can see that we can have a look at the companies separately, or we can have a look at the company's figures together. And you can even add some eliminations, either manually by adding the vouchers via an Excel, or maybe you have some intercompany accounts, and we can this way get rid of the eliminations or add them in there so that you can have a look at the consolidated reports for the company as well. And this, of course, is then possible to also build in so that you can have your own dimensions in here. Maybe you have some product groups or some cost centers or other things that you want to filter these reports based on. So the typical thing is that you want to have the view of the whole company in one, and many of our customers have previously done it as a manual process in Excel, but when investing in a BI tool, it automates your processes so that you can now have up-to-date figures every morning. You can see how it's going in both your Finnish and your Swedish company, and then also compare them to each other and and get rid of these manual processes that you might otherwise do every end of the month. But in BI Book also the benefits are that it's not only the financial figures that you can share, but we can also add reporting regarding maybe you have some HR systems or CRMs, and all these can be combined to one and kind of get you towards the master data governance, which is basically a buzzword for having all your data in one place and having one sort of truth, so to say. So instead of that you have your own Excels in Sweden and in Finland, and maybe you're doing your KPIs, counting them in a bit of a different way. So instead having one source of truth, so all the data combined in one place, and having one way of calculating these metrics that then everyone can have access to, and or everyone who is supposed to have access to this, and then you can also share some smaller reports to people who are not supposed to have access to maybe all the data. I think this is a really quick recap and basically just a heads up on what kind of problems you might also have when it comes to reporting and what kind of solutions there are for this. But I think this is basically it from me today. And if you're interested, I'm happy to also discuss more later.
Thanks for that, Otto. Many thanks for that. So we have received, thank you for that. We have received some questions here. I think this is it in terms of the presentation. So let's jump into the already received questions. We have, among other things, received a questions in relation to insurances for employees which are stationed in abroad, well, outside of Sweden, going to Sweden. So this is an important question, even if, well, we have something called posted workers, which more or less means that they go to Sweden for a specific amount of time. In some cases, such reporting may be exempted from reporting in Sweden, but there are some requirements in terms of the environmental agency in Sweden where you need to register. And you must also look into the insurance matters. You must investigate in such case whether the Finnish insurance actually covers posted workers. Otherwise, you need to reach out to a Swedish insurance company. So I hope that will answer that question. We also received a question whether it is advisable to get an accountant in Sweden. If we have a Finnish-based company that has, well, a company in Sweden, but this person holding the structure lives in Finland. From that angle, I must stress that I do believe it's important to have a local expert, as the bookkeeping in Finland and Sweden actually varies. We're neighbors, but it does vary. So it's very important, if you wish to keep compliant, at least have a second opinion of the already prepared books, but it could also lead to double work from that angle. We've also received some a question in general of VAT. So if that person would specify in the chat, we'll be happy to look into it. Another question is what a Finnish company needs to know when starting a business in Sweden, what is different and what are the new requirements. We've already gone through many of these things. Important to know is if you go for the limited company, I must stress the bank account situation, because this is, believe it or not, usually the most time-consuming part. The good bank connections in the domicile country is of great importance. If you haven't decided for a branch or a limited company, from the tax and legal side, we do stress a limited company. That is most straightforward. I also noticed, thank you, that Swedish Chamber of Commerce have added in relation to when there is no board member in Sweden, that they have a service where you can have a postal address by the Swedish Chamber of Commerce. So I think you can reach out to them in relation to that. We've also received another question in relation to a PDF of our webinar. I'm sure that can be arranged, that we can share the pictures. We will sort that out together with Swedish Chamber of Commerce, I believe. I'm trying to see whether there is another one. Oh, okay. So now we have another one. If the Swedish parent company has, very good question. So the case is basically that we have a Finnish parent company that has benefit in relation to personnel. And a question is whether the Swedish company then, or the branch, whatever the establishment is in Sweden, are obliged to provide the same benefits in Sweden. This is really up to you as an employer. It is customary, I would say, that if there is a specific benefit provided to personnel in Finland, for example, and they employ someone in Sweden, it is very customary to provide the same in Sweden. But this is also, there are some obstacles in relation to this, as the legislation varies to some extent. I'm just going to see if I've answered. I must also stress that in order to be able to sign such an insurance in Sweden, it is mandatory to also have a permanent establishment in Sweden. So you can't do that without having the limited company or the branch. So this means that if you remember the third option we discussed, the foreign entrepreneur situation, when you're just registered as an employer in Sweden. This is a tricky case, because in that case you can't actually register. So there we usually do some gross up calculation if the employer does want to help this employee and provide the same benefits. So it is possible to do it, but only if you have the limited company or the branch in Sweden. Please feel free to write any questions, also in terms of sustainability and data analytics, of course. I noticed that we have a question in relation to VAT, but there's not a specific question, so we can't answer that at this stage.
However, I would be happy to answer that question even after this webinar, so feel free to reach out with your question, VAT related question, and I'll be happy to look at that one.
I'm sure that the same applies for each and every one of us holding this webinar, Otto, Karin, Åsa, and myself, of course. I can also add that in terms of doing business in Sweden, we actually have a pamphlet. So if it is of interest to anyone, please reach out to myself or Åsa, and we'll be happy to share that with you, mentioning some important factors and more text than in this webinar.
I think we have one new question there from Marco.
Very good, Otto. Thank you. Now I see it too. Oh, so the question is basically, if we have a person being, it could be one person or persons. So this is if and but. If this person or persons are sent to Sweden for a CM project, I'm not really 100% sure what that means, but maybe that is a specific project. What do we need to consider? In any project in Sweden, I believe the very first thing is to check whether there is a valid insurance that covers the workers in question. You need to look into and investigate whether the project as such might lead to a situation where there is a permanent establishment in Sweden, which in the long run would mean reporting obligations for turnover in Sweden, which is the worst case scenario, and also VAT on Åsa's side. Well, without really knowing what the CM refers to, but let's say a construction project, for example, and in those situations, there is usually a requirement for ID06 cards for the workers. You need to, this is for them to be able to be on site. That can only be done after applying for a social preliminary social security number is samordningsnummer in Sweden. And those two processes, the ID06 and the preliminary social security number, they are connected. So that is important to bear in mind also. Please also check on an early stage. Myself and Åsa, we always say, the sooner you reach out, the better. But make sure there are not any tax registration requirements before you do that, I would say, at this stage. And we've also received a question in relation to whether a company or a branch needs to be connected to a collective agreement. And this actually varies depending on which type of business, what type of business and which area you are conducting business in. I would say if it's construction, I would say it's very, very common to be on a collective agreement, but not always mandatory. It really depends on the project in question and also to some extent your counterpart, what they put on you as a service provider and as an employer, basically. But we have really good HR consultants within Greenstep also, who are really, really more well equipped within those particular questions. But it varies. It's not mandatory. But within construction, I would say it's very, very common. I think I don't see anything else. So I think that means that we're sending out a huge thanks. Or do
I think we have one more question.
Okay.
Just came in.
Thank you, Otto. Could you explain a bit how does ETP works in Sweden? And ITP, this is basically a pension solution. I wish I could, I would say. That's quite a complex system, but it's basically a bottom threshold compensation solution for employees in Sweden. As I previously mentioned, you need to have a permanent establishment in Sweden in order to be able to sign that type of solution. So that is it's a standard solution, but I can't say, if I would say I'm an expert in that field, that would be promising too much. But we have great payroll experts who are within that field. Amongst other, Tobias Myrman is really, really good in those type of questions. So if you would need further assistance, please reach out and I'll be happy to connect you with him. But it's a basic solution for employees as a lower threshold pension solution, but only possible if you have the branch or the limited company in Sweden. And then there is a thank you from the Swedish Chamber of Commerce. Well, very good. Many thanks to you all for tuning in, for listening to us. You have our contact details here. Huge thanks to Swedish Chamber of Commerce for having us. And well, hopefully we will talk soon. Thank you very much.
Thank you.
Thank you.